Alright, I just wanted to go over SPY here for a little bit, a couple things I've been watching. So first I want to put a retracement level from the October lows up to the current highs. And then again we can do a retracement from this pullback. I'm going to change the color and take out these levels. And then again on the last pullback. And again, I'll just change the color here and then we can see what we're working with really. Right now we are being supported by the short-term 61.8 as well as a previous high. Today's low was right down here into the 50 fib. We could put something like this on as well. This would be the shortest term fib. So here we can see that the open today, or the high today, was the shortest term 61.8 at 210.54, and then this cluster of fibs here is the support, well, current support, not so much after hours right now, 209.72 to 209.90 range. So these would be the prices I would watch for Fibonacci's at least on the way up and or on the way down, depending on which direction we move. We can also see that we are forming somewhat of a head and shoulders pattern, well, inverse head and shoulders pattern, right here. We can see a neckline developing in this range with the shoulders here and here, and then the head obviously being down in this range. If we zoom out, where we can see it a little bit better. So you've got your two shoulders, your head, and then your neckline. If this were to break up and out, typically it's about a 74% of the range of the pattern. So if we were to assume, let's just call it 213.34 and the head at 204.11. So if this were to break out, we could assume a move about $7 higher, probably up to test the 220s. This might be a little bit too far real quick. There we go. And then we can see that if we were to break up over that and our target was 220, we've got a little bit of resistance at 217s, a 219, and then there's a couple up at 220 that we can't see on this chart. If we remove these drawings real quick, I'd like to look at the volume profile. And we can see on the 3-year SPY chart that the high volume node has moved up into range here at 207.78. And in general, there's just a cluster of volume really here to here, which is right about 204 to 212 or so. There's a developing volume cluster. We can see what usually happens when volume develops. Here we can see it developing. It forms an area of volume support, it breaks out and then runs back up and then down to test it, and it creates it somewhat of a base. Basically how it works is that when people buy a certain price and it gets back down to that price or lower than their price, most people average down, and so through the averaging down into volume, and the creation of volume, it creates platforms for a move higher, or it will create resistance if it moves below volume. So what we see here on the 3-year, again, is the development of a platform of volume, a move up, again, a development of volume here in this range, a move out of the volume, it comes back up, and it creates volume, it drops out of it, it comes back and uses volume as support, and then it pushes back through volume again, and now that's where we are again. We've created a substantial amount of volume in this range. It is the highest amount of volume on the chart on the 3-year. If we take it out to a 5-year, we can see that it's no longer the highest value of range. That's all the way down here in the 133 area, but it is still the biggest build out until that point. If we check a 4-year, we can see that we're not quite to the volume of the 4-year, but we are quickly catching up to that volume. So what I'd expect to see is a test higher out of this range. To be safe, you wouldn't want to play anything really within this congestion range of volume. You could play call side on the way up out of 212s, or you would play put side below 204 with a target somewhere into the next volume cluster in the 201s. If we apply our fibs, we can see the current area of volume on the 6-month is developing in between the 78.6 and the 61.8 here, between 209 and 211.36. Short-term wise, it really seems the safe play not to fight the volume, at least on SPY. You'd look for individual stocks that you would want to trade, at least that's what I'm doing. You can find a scalp or two within the intraday, but I won't be scalping the majority through this volume, because again, what it's going to do is just going to create congestion of people buying and selling throughout range, and it can create quite a bit of chop. So for now, what I'm going to look for to be able to get really swing long into SPY, again, is a breakup here over the 211, 212 range where that volume really dropped off. We can see that's quite a bit of the tops. You could play that into the neckline again of the inverse head and shoulder here in the 213s. Best bet would be either to stage extra long to make sure that broke out, or just to play it up into that range and then get out, and then once the resistance breaks, you could play it up into the 217 targets. For now, at least with the earnings and everything that I've seen, unless there's an extraneous event, I would expect eventually for the break to be up. It's just going to be a matter of time, but what we're going to have to do is just have some patience and let this thing work itself out. There's no reason to really get caught and lose any of your capital if you don't have to. So that's my take on SPY, at least for the conceivable future. My guess would be the next at least 2 weeks. These would all be areas of interest, including the high volume areas, and then all targets again, or supports and resistances.